Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, February 6th, 2012 is sponsored by Realtik. All right, let's get into the mix, folks. Markets are very quiet today. This is called a Super Bowl hangover, and generally the Monday after Super Bowl is always very, very light. Today is no different. 63.5 million traded on the SPY, which again is on par for under 100 million for the day here today. And again, that is minuscule volume. The markets opened a little bit lower on worries out of Greece. Ultimately, that's been kind of the main focus over the weekend, wondering if Greece is going to get another bailout type deal so they can stave off default. And again, that deal, we should hear whether or not it's going to happen within the next 24 hours. At least that's according to the latest news briefs. Now, if the market does get a nice deal for Greece and it's happy about it, you may see a little bit more upside in this market. Right now, you hit on Friday the next resistance of 134.65. The next one after that, which would be the next leg up, if we do get one final decent piece of news out of Greece and maybe things in Europe again look better and therefore the dollar declines, if that does happen, 135.60 is your next level of resistance. If I go to the daily chart briefly, I can show you exactly where that level comes from. Let's zoom out just a little bit. First of all, the level we hit on Friday at the high was right here. Draw that line straight in. You can see pivot high going back to July to the current level on Friday. And then if we break through that, as I said, the 135.60 area would be this pivot high right here. All right, and again, that's 135.60 to 70, give or take a little bit, and that's the pivot high from early July. All right, so late July, we hit on Friday that pivot high, and the early July if we continue up on decent news out of Greece or the Eurozone. So again, that's what we're seeing right here, but at the same time, we have to recognize the fact that the markets are extremely extended. And again, it doesn't mean that we're going to fall, and I want to make this clear. Markets can remain extended for long periods of time. It's just a matter of being very careful on any longs you're in. Right now, I'm really only long small caps right now because they are just running like the wind, making amazing money. I've had some amazing small cap calls, but bottom line is, if you're going to be long large caps, be extremely careful. The extension move in this market right now, one negative default out of Greece, for instance, and you could see a epic 500-point decline in the Dow. I mean, it would not be shocking because of how light the volume has been. Volume comes into the downside, could slam this market down very, very quickly. All right, now a couple other things we want to go over. First off, you have to note that the markets have found some support here. You've rolled over a little bit from the highs, but the volume, again, is just so light. In addition, what I want you to do is take the low from today, connect it to the secondary pivot, and look at what you get. So, again, this is a general trend line, and as long as the markets can stay on this bluish line right here or above, then you're not going to head back to the lows of the day. Should you break through this on a closing basis of the 10-minute candle here and close below the blue line somewhere down here, you actually may slowly float down to the blue line low of the day, which matches the low from Friday. All right, and again, just to go over the negative for today, why the markets are neutral to slightly lower, with the Dow down 48 points, at NASDAQ down 7, S&P down 3.5, is because, again, people are just a little nervous about what's going on in Greece. There's no definite deal. It seems like a deal's a little tougher to reach right now, and the market is just on edge just a little bit there. Okay, so that's what we have going on there on an intraday basis. What I want to do now is go over some key charts. I have some traders in my office here that wondered about a couple different charts on stocks, so I wanted to go over those charts, where the resistance levels, where the support levels, and what level would I be looking to possibly pick up or short these stocks. So let's start out with the first one. Question comes in here about Dell on the daily chart. Dell daily chart extremely extended. One of my traders is saying, the question being, where would you look to possibly short this play? And the key is it absolutely is extended, extremely extended. What I like to do is connect the highs always. And when you connect the highs right here, you do recognize the fact that you are into some resistance. So again, you're into resistance. And at this point, I have no problem with the small short position on Dell. All right, Dell right up into this area. It pierced it, couldn't get above, pierced it, couldn't get above. Just the key is here, if you're going to go short Dell, and again, I'm talking to one of my traders here that asked this question, is you must go a little bit on the lighter side. You don't want to overload the short side here. A full position for me on a short or a long of my swing trade portfolio would be 10%. That's the methodology. On this, because of the light volume in the markets and the tendency for this market to continue to float, it seems, I would probably lower that to about 7% of my total swing trade portfolio. So this way you take a little bit less risk because you're not going as hard. But I have to say, this area on Dell looks extremely good. Good resistance here. right up at this trend line. Also an extended move, unbelievably extended away from the 20 moving average, has a good tendency to possibly fall back down, all right? And again, if I zoom out a little bit, you can see here on the charts, you have a lot of trend lines sloping here right through. And if, again, let me just connect this one as well, which is kind of intriguing to me. Connect this high to right here, and you get this general vicinity. So anywhere up in this range would be a good little level. You can see both of those lines and price currently right around that area. In addition, if you continue up, you also have a gap window right here and gap fill right in this range. So that gives you an upper range of where the stock could go, which is right around the $19 level. We're around $17.70 right now. All right, next question comes on 3M. 3M, let's take a quick look at the chart. Another pretty extended chart short term, but again, what you can see here is 3M looks a little bit better than the Dell chart. Dell was a much straighter to the upside, vertical type move. 3M is a little bit more of a flatter move. It's still very, high on the chart here, short term. But notice the 2 moving averages below, 50 moving average also down here. So it's above all moving averages. Even if you were to short this, there's not a lot of downside. Your downside is down to these moving averages. So it would not be a short candidate to me. What I'd be looking for is either a continued move up, to a next resistance level, and if it got there, then taking a short, or I just stay away and not trade this at all. All right, and right now, the obvious level to be watching, you have a resistance here at around $90, which it still hasn't tagged yet. And again, you can see where that line comes from, this pivot low here. Then you have a gap window at this point of interest, and you also have a gap fill right there. Okay, so again, those are your next resistance levels. Really, you're not into any significant resistance levels that I see right now currently. So again, there's just no reason to short 3M. MMM is the symbol. At the same point, on a pullback, I would have to see a pullback to the 50 moving average to even think about going long. Pullback to the 50, though, actually would be a nice little long opportunity, assuming this chart pattern stays the same. All right. Next question comes from another trader in the room here, and that question is on Caterpillar, wondering if Caterpillar is at a level where you'd want to go short. The answer is it's very close, but not quite yet. What I would prefer is let it get the maximum extended move, which would take you up to the pivot high from 2011 here, which occurred on April 29th. It looks like April 29th it hit this pivot high before reversing. It was a pretty big reversal. As you can see, it fell, big bounce, and then had a huge fall with the market there. This level is what you want to look for. So if Caterpillar CAT symbol gets to about 116.50, that's going to be your spot to look on the short side. Okay, and again, interesting, this has a nice inverse head and shoulders, which is kind of played out already. Here's your inverse head and shoulders for those of you that are interested. And sure enough, your neckline breakout was right here, right there, and that's the extended move from the breakout that you play to the upside. All right, and the last question I want to go over is Hewlett-Packard, HPQ. You can see a lot of former lines on this. I used to analyze this stock a lot as it was falling. The stock right now is a little on the short-term extended side, but again, you wouldn't be shorting this because it's not at the 200. At the same time, you would not be looking to buy it because it isn't down to these moving averages. Based on what I'm seeing on this chart, this is more of a neutral chart. And again, the 3M and the HPQ are more neutral. The Dell is really right in a good short range, and the Caterpillar is very close to a shorting opportunity. So Caterpillar and Dell are my two favorites on the short side. Caterpillar needs to go just a little bit higher, and 3M and Hewlett-Packard not liking those chart patterns. You don't see good price pattern and time focusing here, which would give you a nice little possible entry, either long or short. Neither one looks good to me. In small cap land, what else am I watching on small cap front? We have some big movers again in small caps. Dry ships is not really a small cap, but let me just show you this. Great breakout on this shipping stock. We talked about that in the chat room not too long ago on the shipping stocks. One stock I gave out, MOTR. Last week I did an article on the Rant and Rave blog, and I always encourage you guys to follow me on Twitter and on the Rant and Rave blog. You can follow me on Twitter at Gareth Soloway on Twitter, but on the Rant and Rave blog, I put out an article last week talking about MOTR, which does on phone advertising, mobile advertising apps, and they kind of help bring that sophistication to some of the carriers, the Verizons and cellular carriers and so forth. And this stock was trading at 77 cents when I wrote the article, and no sooner did I bring the idea that it's a Facebook play based on everyone. I'm on Facebook on my mobile, on my Droid. So the idea here that they're going to somehow match or map into that area with Facebook and so forth. I've got to believe they're going to attack that area. That's probably what they're trying to do right now and make some money off of it based on how cheap this was. It seemed like a no-brainer to me. And sure enough, at 77 cents on MOTR, I gave this play out. And the play literally in the 3 days since I gave this play out and wrote the article on it has gone from 77 cents to $1.68. That's basically 125% return in just 3 trading days. And that's the key, folks. I want to make this clear. We have a strict methodology here. It's proprietary. I utilize my thought process, our price pattern and time methodology to come up with plays, both large cap, mid cap, ETF, you name it. We trade everything as long as the chart looks good. All right, again, we don't discriminate. I'm not going to say I don't do these plays or that plays. If the chart looks good, I'm trading it. And again, I think everyone needs to have that mentality. Very important to have that mentality. Don't discriminate if there's money to be made because, again, you can trade anything using our proprietary methodology. And if you want to get involved here, it's very simple. 7-day free trial. So a 7-day free trial to the Research Center at inthemoneystocks.com and a 7-day free trial to the intraday stock chat at inthemoneystocks.com. Take the 7-day free trial. There's no obligation. You can easily cancel at the end of the 7-day free trial if you don't want to be charged. And if you cancel, you obviously are not charged. But generally, we find people that take the 7-day free trial stay with us forever because the methodology makes them money. All right, guys, I got to get back to trading, but again, good stuff here. Let's continue to trade this afternoon and the next few days. Later this week, we have China data coming out. Overall, economic news is pretty light in the U.S. Watch for that Greek news over the next 24 hours. It either will pop the markets or drop the markets, in my opinion. Take care, and again, have a great day.